Good morning and happy Monday, traders. It is 8 a.m. Chicago time on Monday, the 23rd of January, 2023. This is episode number 2397. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Whoop. Looks like I lost the pre-market summary sheet here. Let me just get this going a second. How's the sound check this morning? How's everybody doing? How was last week? There we go. All right. Man, when tech doesn't work, it is really a pain. All right, so here we go. All right, jumping into the pre-market summary sheet here. This morning, mixed to mildly risk on. We have the S&P pushing higher by about 7 points. The market's mostly balanced. Coming into the session. We're trading at or around the Friday settlement. This morning, ECB's not. We should continue with the half-point hikes at the next two meetings, and time to slow pace of hikes is still far away. U.S. earnings season ramps up this week. Spotify layoffs expected this week. Spotify is another tech firm that is laying off 6% of its workforce. We heard from Microsoft. We heard from Google. We heard, and now we're hearing from Spotify. I think Salesforce as well was knocking some people out. So, recession. But, we're not getting a clear picture of what this recession is going to look like, or is looking like. It just seems very muted. In terms of just real quick, I like to look at, on Mondays, I like to see what's up for the week. This week, relatively light-ish in terms of economic releases. We have GFK consumer confidence tomorrow at 2 a.m. Eastern. And then we have IFO business climate from Germany. That GFK consumer confidence from Germany, Great Britain reported last week. Germany also has IFO business climate. We have the Bank of Canada interest rate decision on Wednesday. And then Thursday, we had GDP growth rate advanced at 8:30 on Thursday, durable goods orders. And on Friday, we get the core PCE, which is a key input. Core PCE for the U.S., personal income, personal spending, and that's it for the week. So pretty light week. We just need to pay attention to earnings, and some of the biggest earnings have already come through. We've got more this week. Let's look at what this week has in store here. Oh, it's not able to load. Today, we don't have too much on the calendar. We've got ECB's Panetta at 9:30, leading index, which is an index that the Fed watches. That's at 10 o'clock. We may see some movement. Eurozone consumer confidence at 10. ECB's Lagarde, which is very important to note. ECB's Lagarde has warned short-term interest rate traders that if they are trading against the short end of the curve going up, they're likely that she highly recommends they reconsider their position, which is interesting that an ECB president is warning traders not to bet against the ECB. And then the rest is Australian manufacturing PMI, services PMI, and Japan's manufacturing PMI and services PMI. Note the rotations, as it is Monday. Rotations continue to go down. Volatility continues to go down in the various products. We have the rotations going down on the Russell. The others are kind of staying steady. The impulses are going down is what I meant to say, not the rotations. Looking at the S&P is in a multi-distribution profile, really balanced. Very, very clear low volume node in the S&P. We'll look at that in a minute. 169,000 contracts traded. The inventory is basically balanced overnight with only about 20 points of range. We've got 4,000 as the high. We've got 3980 as the low and 85 as the point of control. This is a market that is just resting. So that's that. A quick look at what was expected on Friday in our just typical review session. Coming into Friday, we talked about where we are, what we're trying to do, and so on. And Friday, I talked about how because it failed to push back through on Thursday and close the gap up here, that I'm expecting it down at 38.80. And then ultimately in the lower bounds at 38.60. That was the key expectation coming into Friday and for the next couple of days if it if it were to sell off. And I was completely wrong, because Friday we had the opposite. We had a nice squeeze to the upside. There it is. Market opens right up here and then immediately starts to sell off. So I'm thinking that the primary scenario is in play. Pulls back right there to the RTH VWAP and mid, sets up a short opportunity with a stop in this area up here, and it just takes it out and then immediately uses the RTH VWAP, the cyan line there, as support. We see some good lifting right in here, pretty big fight, and then starts to take off. So we get our first impulse for the session is right down here. We have a continuation with another impulse, so we expect another break higher. We get another impulse, so we expect another break higher, that high to be broken. And so Friday really was a trend up day. You could see that the market was in an active price discovery. It closed the gap to the upside, pushed into the 39.50, consolidated right here in this mid-century figure, which I talked about. If we get back into the gap zone, into the range, the mid-century generally gives us some pause. We see a nice consolidation there, and it looks like it's unable, right? So we're in this 39.50 zone, lower high, push down, pull back to the consolidation, and push down again. And to me, this became a slightly higher risk trade. The trend is up, so we're looking long side only. From the time that the market broke and moved away from this impulse here, really the shorts are off the table, and we end up pulling back to the break above the IB. And then from there, it is just buy. If you recall on Friday morning, I said the risk with the bearish view is that it was options expiration Friday, monthly options with huge positions expiring. And there's a quantitative, for those of you who are here, you might recall me saying this, you might want to note this down. Quantitatively speaking, the historical probability on Friday of options expiration is that the S&P has a positive tilt. It tends to climb higher on those Fridays. It has tended to climb higher on those Fridays than to push lower. I don't remember the exact statistic, but this is what we saw on Friday. Closed pretty strong. The delta was positive the entire session. You could see the rotations, the positive rotations are so much bigger. This line here, the 10-point line, is the limit, the current limit for an impulse. And you could see that we've broken the impulse limit multiple times on the buy side on Friday. We've broken the down impulse limit early, and that's why it sets us up for the short. We have an impulse down. We broke the impulse limit, so sell the pullback for a continuation. Expected it to come back and retest the 12 and a quarter, push to the 04, and then break through and push to 38.80. That was what was expected. But as soon as we cancel that impulse on the other side, then we have to lay off. This is very, very this is a very, very early indication that you don't want to be stubborn against the buyers, and that's what we got. This morning, we come in and we have a double distribution profile, the point of control at the lower end of the range in the 39.85, and we've been completely sideways with these kind of random pops and reversals, and now what we have is this line in the sand that we're pushing through. If you recall, maybe you don't, but you should, 39.92, the big number in this area, and that's where we are. We are imbalanced with the MC point of control. Very important number. Once we broke away from 36.80, 39.92 became an important number. We pushed as far as 40.35 or so. We came off all the way down into the 3900, and now we're back at 39.92. We're back in balance. We can see it best in this chart right here. There's your 39.92. This is the balance zone up above. There's the 36.80, okay, or 38.60. I apologize, had that backwards. 38.60. We broke out of this lower balance. We pushed right into 39.92. We hit 39.90 the one day, and then we continued to squeeze, and then came and sold right off up till Thursday. And then on Friday we opened and tested settlement on Thursday, and then just immediately found buyers, closed at the high on Friday, point of control at the upper end of the range. And then so we are very much primed. What Friday showed us is we're very much primed to continue to push higher. The immediate target, short-term target on that MC right up here is 40.13. 40.13. So we got the 4,000. If we push through, that becomes the next target. And then we're looking at 40.35 above there. 40.35, and that we are squarely back in this balance zone. So once we get done to the upside into the 40.13, I want to see, does it find sellers up here in what I anticipate to be a relatively sharp resistance area? I expect those who are interested in trading at this level, that they will likely continue to be interested in trading that level or covering on the return. So I expect them to hold prices up in this 40.13 range. So this should I don't like using should or must or will or has to. When it comes to trading, it is very likely for us to see consolidation and at least a brief return pullback once we do that. There is no gap today. We're opening right against settlement, right against Friday's close. And there is, you notice there's some shaded areas in Friday's profile. What is that saying? What are those shaded areas saying about Friday? Here's the single profile chart. The shaded areas, I can't really wait for your answer. The shaded areas speak of poor structure. These are called single prints. You could see that we had single prints on the way down, and we are filling single prints on the way up. Still have single prints above us, and that brings us, these single prints bring us back to that 40.13. 40.13. So we have single prints from Friday, so we have pretty weak structure beneath us. Pretty weak structure beneath us. So if we start to push lower, we start to fill in these single prints, I would expect it to continue lower until it gets to the point of control here, the TPO point of control, which coincides with the mid-century figure 39.15. So what this does as a trader is it's showing if it starts to pull into the range, start to fill the single prints, pull back, and it's weak, and then it takes that low out, then you have a fair amount of room into 39.50, because that is a high probability tag into the 39.50 before we make a decision as to what we do next. So this is an important little kind of tidbit. Just as, the Thursday finished relatively weak, imbalanced, out of range, leaving a gap open. So the expectation is if it pushes out of range, then we are likely to fill the single prints down into that 38.80. If you recall, on Friday to the downside, 38.80 was the target, and it's because that's where the weak structure is in this area. And if it is unable to bounce off of weak structure, then now you start to look for it to continue down the flagpole here of this breakout day, and then we're back in balance down to the low side. So very interesting. Very interested in what it does once we come in here. What are we expecting for today? So here's what we've got on the 30-minute. We are pushing up against this structure right here. Oh, wow, cool. We're pushing up against this structure right here. We have some price action. We're pushing into a zipper essentially in this zone right here. And then we have a zipper underneath us in this zone right here. We are trading right in between. We've got the settlement right below us. We're really trading around settlement, and we're pushing against the potential resistance. So a push through the 4,000 is very, very likely to quickly get us to that 13 area. A push below today's low is likely to fill in the singles. So we're at this interesting inflection point. We could just chop around, given what we've done in the overnight session, the stats for the overnight session. We could chop around coming in here. But if we do break the low, I'm looking for weak pullbacks to get short. And I'm looking to tag that 39.50 area or somewhere in between. This is where the next support cluster is on the profile, right down there. So there's a fair amount of room from this to this, and that would be the trade. Okay, so that's ES. NQ, same kind of story. Left a gap behind on Thursday, opened, retested. NQ was relatively stronger. It could not push into settlement before it started rotating up. It still created a relatively weak structure. If you look at the NQ, it still left some pretty weak structures here. Right, so there, it's pushing into a weak structure profile already. It kind of opened, pulled back to VPOC or the point of control, TPO point of control, and poof, off to the races it goes. It is holding the upper end of the range. To me, it's starting to push into that 11.710 area, which is a kind of a point of control right in here. A little bit of resistance. This is the equivalent of the 40.13. If it's not able to maintain a bid above 11.710, which if it does, it's able, then we get into, remember that number from like the beginning of the month, once we broke out, 11,800. This is the composite point of control, the big magnet up above. So if it gets to 11,710 and holds a bid, this becomes your next target. 11,800 is in the cards, and it pushes us into the upper range. We can see it a little bit better right here. Okay, so there it is, the 11,800. So if we continue to squeeze, that would be the next key target. If we open up, push higher, then come back in, fill these singles out, then we are likely to squeeze down to 11,500 from where we are now, which is 11,680, 11,500. And if it's not able to hold the 11,500, then it's likely to really accelerate to the downside, and we're looking at 11,162. Yes, Friday's profile gets merged in to the sandwich. You could see that we are out of balance a little bit on the composite, and we are starting to push into the upper bound. So pretty decent opportunities in the NQ, in my opinion. Looking at crude oil, crude, very interesting. Crude's got a lot of strength, but a lot of strength going on so far. I will reiterate that the 11,700 is a key area. This is the key over under, and we are above the over under line, and we are very likely to continue to squeeze, despite the fact that we opened up, pushed higher, closed weak. The very next day we opened, pushed higher, opened, tested down, pushed higher, closed higher, and then today we are opening, pushing down back into the range. This morning's trade in crude opened at around 82.43. This morning's trade, classic gap to settle trade. Classic gap to settle trade. So 82.43 back to 81.64. This is what I would be targeting on crude, and I would look for it to pull back a little bit. Looking at the detail on crude, if you look at the box structures, it's had these kind of balanced composites. It finally broke out. If you recall, while we were in this composite, I was looking for the low at 70 right down here. But since it broke to the upside, finished strong, the next target becomes this 79.80. It pushed through that, and now we have a magnet down below. Again, I expect it to get to the settlement and then potentially push down into the 81 for today. But it's very likely to find support, and then from here, it starts to challenge the most recent high and then back up into 84. That's what crude looks like to me. It's very bullish. We talked about how it was expected to push to 70, couldn't, got over the 77. As soon as it got over the 77, shorts are likely to cover, and that's what we're seeing now. Okay. Anyway, it's a lot to cover. I know it's Monday, and usually these are long. Just be sure you have clear targets for this week. Like, what are you after this week, right? So, quick trader wisdom. Can you explain what your plan is for the week? Not your trading plan, but can you explain what it is that you're going to be focused on improving this week? If you don't have that, you're very likely to just waffle along. You're very likely not to see progress. So can you explain very succinctly what it is you're going for this week? Are you attacking errors? Are you shooting for some sort of P&L? Are you shooting for execution perfection, which is what you're looking for? You're looking to perfect your process and let the market give you the results as a payback for that effort. But what is it that you're going for this week? You should be able to explain it in one brief sentence. This week, my focus is to get my expectancy to 2.3 from 2.0. My focus is to cut down on my errors by 50%. Here are my key errors, and there's no way for you to know what that is unless you are absolutely religiously tracking your progress on a daily basis to know where you are so you can set targets that make sense going forward. Good luck.